My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to a very special Las Vegas edition of Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to teach you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. Today, it's about the batteries, stupid. Oh, sure, I can talk about all the things that everyone else is talking about, all the things that are beyond our control. The endless drumbeat of tariffs equals inflation, equals higher interest rates, equals recession. There, okay? We've all memorized this equation of woe, and it's what's ruling the averages, even on a mostly sedate day like today, where the Dow declined 11 points, S&P dipped 0.22%. Yes, of course, the Nasdaq shed 0.33%. So, what do you do when you're confronted with endless negativity wherever you turn? And isn't that the case? I think it's a tremendous opportunity to have a little extra cash because the market's unlikely to power higher anytime soon. It's probably more likely to drop lower, meaning this is a good moment to keep some cash on the sidelines while you watch and learn. What do I mean by learning? Today we find ourselves at the Home Depot annual store manager meeting in Las Vegas, talking to the top brass, including CEO Ted Decker, in a moment. Home Depot is an amazing company, both by the numbers, with a total compound annual return of 25.5% since its IPO, and by the culture, as few companies give more to charity, especially for veterans, and few take care of their own, like Home Depot does. It's easy to talk tariffs, mild speed bump here, or higher interest rates. Not as important to Home Depot as the positives from higher housing prices. As for the pervasive gloom coming from all the uncertainty, well, that is a little bit harder to figure out. But for me, when I know things are bad, you know what I like to do? A little different. I like to hunker down. I like to learn. So today I learned about how battery technology is replacing gasoline technology for power saws, drills, mowers. Now listen, this is a big change. Billions of dollars. And it's happening right now as the rechargeables are at last more powerful than the gas-guzzling brethren. I know that may not be the needle mover for a retailer's largest Home Depot, but you always need longer-term reasons to stay the course. See, we own Home Depot for the charitable trust, and when you walk the aisles, you have to have more than just good previous growth, which they have. I say you keep your eyes open and you listen to what can drive new sales. You always need replacement cycles, whether the appliances, in this case, whether it be the drills, whether it be the power saws. One of the things the company's banking on, the radical improvement in the power of electric motors over gasoline motors. Keep in mind, there are huge numbers of outdoor appliances that still run on gasoline, which is dirty and dangerous. But people stick with them because they are thought to offer superior performance. Hey, look, that used to be true. But you know what I did today? I watched a head-to-head power saw contest here, and the electric was much more powerful. Now, that replacement cycle alone won't change Home Depot's next quarter. But that's not the point, people. At this moment, everybody's given up on so many stocks. I hear, especially technology. If we're going to own anything through this environment, we need something that increases our odds of winning. I file the rise of electric outdoor appliances away. So when Home Depot stock gets hit, and it will get hit by the pervasive negativity, we got one more reason to feel comfortable owning it. And of course, if it drops more, buying it for the charitable trust. See, this is something I learned during the Great Recession. Back then, I stuck with Home Depot when everyone told me to sell, 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 because homes were losing value for the first time since the Depression. Of course, the company ended up buying back a huge amount of stock during that period, ended up in incredible shape versus the competitors, many of which went by the wayside. At the time, this stock was an $18 stock, and it felt like the world was ending. Now it's a $355 stock, and it feels like the world's ending. You know what? Home Depot stock is still cheap, and it's well off its highs, even though the underlying company is doing incredibly well. Now, you may be skeptical, thinking that higher interest rates, tariffs are more important than everything I just said, more important than the specifics of this home improvement chain or what they tell me. I disagree. To me, this is when you keep the faith. And if the stock of Home Depot drops, well, guess what? Buy, buy, buy! But don't take it from me. Earlier today, we checked in with Ted Decker, the chairman, president, and CEO of Home Depot. I want you to take a look. We do have a lot of negativity, I feel, in the country. People are worried about what they can't understand. They're worried about tariffs. Now, you have equipment that is going to be tariffed. I am starting to take the view that it is going to be a little bit more transitory than people realize. There could be a spike momentarily, but you'll do everything you can to keep costs down for the consumer, because that's the way Home Depot has already done.
That's what we do. And let me start by saying you just had our founder, Ken Langone, on your show.
Yes.
Just start by saying we're all bullish on America. And there's a lot going on, but this is the greatest country in the world.
Thank you.
And as Ken said, there's so much optimism. We feel it in Home Depot. And whatever would happen, we're going to work through it. You know, we had tariffs in 2017. We had, I mean, when did we have, customs houses in all our ports? We've had tariffs forever. We will manage through it and come out the other side better than anyone. No, so it's not something we worry about.
But you have been a great fighter of inflation. I think people don't realize, particularly in Washington, there are some companies that have said, you know what, we're drawing the line. We're not taking that price increase. You're one of them.
We are all about being the advocate for value for the consumer. Our business is built on providing value and great quality and customer service. We call it our three-legged stool. So we want the best assortment, we want the best value, and we want the best customer service all under one roof. So value has always been part of our equation. And we want to sell product. We want to move volume. We're a big box retailer at the end of the day, and now increasingly wholesale distribution. We need to sell product. We're not out here to milk margin. We are here to provide value and drive units for our suppliers and our customers.
Now, how important are interest rates? We had a big Fed meeting. People are concerned that rates have not come down enough versus the appreciation of your home since 2019. Right. How do you balance it?
Well, we focused on the appreciation of the home. I mean, you know these numbers, Jim. Since the end of 19, U.S. home values have gone up over 50%. The U.S. home is the single greatest asset class in the world. We think it's something like $45 trillion of value in U.S. housing. So interest rates may come and go on different rates. We had some historically low rates. We're working our way down from what was a shorter-term spike in rates. But home values going up 50%, the store of wealth, we think there's something like a $13 trillion increase in equity in American homeowners' home value since the end of 2019.
Well, what that says to me is that if I improve my home, it's not an expense. It's a capital investment. Very different mindset.
Yes, and that's the way we think about it. So you do an investment in your home, make an addition, you put in a new kitchen, a new master bedroom, you freshen it up. That is an investment in your home.
Now, one of the things that also should help you, it's not like the housing stock is brand new. It's been aging for a long time.
As you'd imagine, our housing stock is the oldest it's ever been, and that would be obvious, but with the lack of building, we are anywhere between 2 and 5 million housing units short of demand. So since we haven't been building that much, you're actually aging more than you normally would. So well over half the houses in this country are now over 40 years old. So the amount of work and upkeep you need to make on those houses, they've gained in value, but they need a lot of work. And we're the place to go to help people do that.
One of the things we know, if you've got an asset of that great worth, where you could damage it the most is having a leaky roof, and you've really taken care of that with that acquisition.
We've taken care of that with our friends at SRS.
It's very
absolutely.
Smart. And those who have a pool, unfortunately, I know it, that if it gets rusty, it's done, and it may be your most expensive asset if you do have one, and you can't put it off.
Well, and desalinators and pumps, they tend to go, and we're there for you.
So what categories are doing well right now?
Well, garden, as you can see, this is our season. We've had tremendous success with our decorative holiday programs. Our Christmas programs are unbelievable, and then the Halloween program with our giant Skelly, which I'm sure you've seen here in the distance.
No,
that is
very scary.
Just taking America by storm. But someone asked me the other night, they said, who's coming to visit the show? They said, well, where should I spend my time? Where's the most excitement? Where's the most innovation? I said, literally, there's 600,000 square feet of innovation. You can go booth by booth, bay by bay. There is innovation at the Home Depot.
Yeah. And I wanted to ask you, you did a survey of what are the top priorities. people. That's new. You just released it. What are the top priorities for your customers?
Well, our customers, the wear and tear on the home. So you need to maintain. There's so much to do. Leaky faucets, as you mentioned, leaky roofs. A lot of people painted. In 2000, the early days of COVID, I think everyone painted some room in their house. Well, now that's 5 years old. So the scuff marks and the dog prints and all the rest, it's time to repaint.
Well,
so we're bullish on painting.
Again, any of these things that can preserve the value of your home, your greatest asset. Now, I wanted to ask you, any impact on, say, immigration? We need workers. We just came back from a conference for NVIDIA. What did they talk about? Without immigration, we don't have enough workers. At the same time, obviously, we have a balance. We want borders. What's your take on the issue?
Well, the thing that we've focused on, Jim, and talked about for a long time at the Home Depot is the United States has a shortage of skilled trade workers. In our industries, in construction and electrical and plumbing trades, we think it's like something like 400,000 shortages of skilled trades. If you talk to builders, if you talk to large-scale remodelers, they'd say one of their biggest issues is that skilled tradesperson on the job site. So we're very, very interested in partnering in public-private partnership to say, how do we get more trades? We at Home Depot, we committed $50 million to train 2,500 tradespeople. We're way beyond that. I think we're up to something like 5,000 tradespeople that we've trained. So when they finish the class, they're a licensed plumber, they're a licensed electrician. We're working with the military. We're actually on military bases with the Home Builder Institute, whereas service members, when they've said, I'm transitioning back to civilian life, we'll go on base and we'll teach them trades so that when they come out of the military, they can go right into skilled trade. And it's a great job. These are six-figure jobs.
Sure.
You're generally your own boss. Right. You make your own lifestyle. And I think as a nation, John Furner and I at Walmart wrote an op-ed on this last year where we said not everyone needs a 4-year degree. There's just technical schools and associate degrees and trade schools. It's a real need. It's a great career path. And that's what Home Depot is focused on.
They're telling me that we're out of time, but we're not. Because I want people to know the culture, how much money you've raised, what you've done for veterans. It's a different kind of company.
Well, as our founders always talked about, core value of ours is giving back. And we've always been generous and we help a lot of people, but we focus on the military. And there's so many military folks who have PTSD, who are homeless, who are not living in safe homes at the moment. So Frank Blake initially, years ago, consolidated our giving into Veterans Affairs. We've had a series of commitments, 100 million, 200 million. We've passed all those. We just announced a $750 million commitment to veteran causes.
You are America.
Well, we love it.
You are the leaders. More with Home Depot CEO Ted Decker next.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.